Welcome to Popeye's House at Payne University. I'm Professor Popeye, the Dean of Mean. So sit down, shut the fuck up, and pay attention. Class is now in session. Today we're going to talk about the looming economic collapse. And quite frankly, this is kind of like a philosophy, but yet reality as well. Is this going to be a chrysalis, a crucible, or a crash? And there's a couple of things that really need to be looked at. One is when the CME did the gold circuit breaker, where it halts the prices and it put a $400 maximum across the board, where it's kind of hard to explain in the overall sense, but it essentially comes down to if there's a sharp movement in the price, i.e. it jumps one way or another too much, and particularly if it goes down, this is a whole thing. It puts a halt on all trading. So you kind of need to think about some of this. You got to look at it from a realistic standpoint of why are some of these things being put in place. Another thing that would be something interesting to look at, it would be, why is the U.S. Treasury getting an assembly of survival kits for their employees? You know, like a backpack with food rations, water, sanitizing pills, and so on. Kind of makes you wonder, what in the world, why would the U.S. Treasury be doing this? Well, mainly it might have something to do with the fact that there's like $303 trillion in derivatives that have been put on the back of the taxpayers. We're on the hook for this, for another bank bailout through the FDIC. And if you want to look at this from a realistic standpoint, why is some of this happening? Well, it's coming down to some of the oil prices. I don't know if any of you have been checking on Bloomberg's oil prices. I'm sure that some of you noticed that the gas prices went down and then they went back up. Well, the oil prices have stayed down. And quite frankly, one of the big issues is, well, let's kind of back things up a bit. Back in 07, 08, in the crash, approximately 40% of the U.S. wealth was lost or destroyed. It was basically done with. And the way people have been taking care of this is they've been propping it up with more debt. Since 2000, debt has approximately doubled to the point where we have about $58 trillion of personal and business debt throughout the U.S., nearly 4 times the output of the U.S. as a whole. That's a tremendous amount of money. That's huge amount of debt. And there's nothing more than, this is nothing more than an increase in the overall debt. This isn't helping anything. And in fact, a basic statistic that goes along with this is the fact that right now we have a ratio of about 2 to 1, 2 people going on food stamps versus 1 getting a new job. This is a huge imbalance we're not being told about, and people need to start looking at some of this stuff on a realistic basis as to what's really happening here. We have to realize that the U.S. is no longer the leading economic power. That's shifted to China, and even they're starting to slow down. They're experiencing a lot of problems. Here in the U.S., we've had an annual decrease in retail sales of anywhere from 10 to 12%. That's left really close to 1 billion square feet of retail space empty throughout the U.S. This is huge numbers, and you'll find links to everything down below. So feel free to look at some of this yourself. Don't take my word for it. Look at some of this stuff for yourself. I don't care if you think like me, just think, look at it and think about it. Ask yourself some of these questions. Why is some of this stuff happening? Why is it that we're looking at a situation that retail space, it's not due to internet sales. Internet sales are down too. We have what the experts say is nearly half the malls over the next couple of decades closing throughout the US. The average household income has been on an immediate and continual decline on almost a daily basis. Somebody somewhere is taking home less money than they did the day before. And well, it's rather hard for some people to change their lifestyle. They can't just necessarily move if they don't have any money. They can't just sell their house if the market is down. They sell their house, they lose money. Now it's become a loss. People can't afford to do this kind of stuff. This is a real problem, people. And how does this relate back to some of the oil prices? Well, what it comes down to is one of the things that's actually been helping the U.S. economy stay a bit stable as opposed to completely crashing has been the fracking, the shale oil. This has created millions of jobs. But the problem is OPEC has actually been fighting against this. They've started a war just not too long ago. The U.S. started an increase of about 4 million barrels of oil into the economy or into the market on a daily basis. Well, countries like Iran, Iraq, Venezuela, Saudi Arabia, they all got together, and in November of 2014, November 27th to be exact, they had a meeting to try and figure out how to essentially increase the prices of oil, or actually I should say decrease the prices of oil to where it made it no longer profitable for the U.S. to continue and or U.S. companies to continue doing the fracking and removing shale oil. This is a huge problem. Back in the 80s, Saudi Arabia tried this to no avail. All they did was lose market share. So we're not seeing what we think is the result of good business practices. We're seeing the result of essentially hate on the U.S. and the U.S. not managing things quite properly. And to be completely honest with you, I am not a fan of fracking. One of my biggest problems with fracking is that it contaminates our water tables, our fresh water system below ground. And a lot of people don't realize how much damage it's actually doing to that part of our ecosystem. And until people become aware of that, even the people that are working the fracking sites will start to become aware of what damage they're actually doing to their family, their present family, and their future family. So some of this has to be looked at in a real sense. And of course, one of the things that we have to look at is we had a fairly sizable crash of over $40 essentially over the last couple of years. And what I mean by that is the price per barrel of oil went from about 105 at its peak to down to around 45 at its lowest in just recent months. Now, that should be great for us as the consumer. That should be even good for the companies, the producers, because they should be able to buy their product at a lower price and then in turn give it to their consumer, their customer at a lower price. That's then the customer willing to purchase more. So it should be a win-win situation. But this doesn't seem to be the issue when we see an imbalance. If you were to go back and look at the gas prices back in 2007, 2008, so on, when the oil prices were crashing and gas prices were following and everything was looking, well, reasonable as far as what we were getting. And then all of a sudden we had this huge increase. Boom, it just blows up. All of a sudden we see prices starting to skyrocket on the oil, prices starting to skyrocket at the gas pump, and we hit nearly $5. In some places we actually hit $5 a gallon, which was just absolutely outrageous. So what's been happening is there's been these derivatives that have essentially been placed on oil, and the banks have picked these up, and it's essentially hedge funding. And what we're looking at is essentially a $40 billion exposure, which is an enormous amount of money, particularly when you consider the fact that, well, for one, the U.S. is in debt about $18 trillion. Well, if we're talking an exposure through the oil companies, basically we're liable for that debt. You and me are liable for that debt. And I'll hit you up, or I'll show you in just a minute exactly where. And again, links will be below. $40 trillion is a shitload of money compared to 18 trillion in a basic sense for what the U.S. is willing to tell us. Now, let's be really, really bottom line here. The U.S. oil companies are setting the U.S. banking system up for a huge failure. Just to kind of give you an idea, essentially they're putting the final straw in the camel's back, economically speaking. For what we're talking about, just to kind of get an idea, these are banks that were considered essentially too large to fail. And by that, I'll kind of give you an idea. The larger banks have increased in size by 37% since the last recession. 5 of the largest banks hold 42%. Get this, 42% of all loans in the United States. 5 banks, 5 of them. 6 banks control 67% of all banking assets. And that includes you. And that is the taxpayer, the ones that are going to be paying for this bailout. In other words, the banks get to keep their profits, but you're responsible for their fuck up. It's just that simple. You have to pay for somebody else's fuck up. I don't get anybody else to pay for my fuck ups. I fuck up, I got to pay for it. I'm pretty sure if you fuck up, you got to pay for it too. But do yourself a favor. Since all this stuff is federally insured, FDIC, ever heard of that? Ever walk into the bank and you see that little FDIC? Yeah. Go online and check Executive Order 13037. I guarantee you it's going to say that you are human capital for the United States government. Essentially, they're making money off of your signature for home loans, car loans, your Social Security, credit cards, and so on. This is all real stuff. Essentially, what we're looking at is this fascist government killing the free market. The corporation of the United States, to essentially give you the most bottom line, basic concept of what it is you're dealing with, is not a two-party system. It is not for the people. It hasn't been for a long time. I've talked about the District of Columbia Act of 1871. Go back and look at that one. If you're not familiar with it, take a look at that. What you're going to see is that it's a corporation. It's a for-profit corporation, and that for-profit corporation is owned by the World Bank. And the proof of this is in Senate document 94-1148 and or Title 22 USC, that's United States Code, Section 286. I can assure you, folks, there is no two parties behind closed doors. There's just one company owned by the bank. That's all there is, folks. One company owned by the bank. Wake up. This collapse is about to happen. And if it doesn't happen, it's a miracle. And all the experts, not me, because I'm not one of the experts, I'm just telling you what the experts are saying. It's a miracle that they keep it propped up just another day.